Does the Fed rate cut affect mortgage rates? We're going to talk about that and more, and we're getting started right now. Hey, what's going on? I'm Emmett Dempsey, mortgage advisor with Geneva Financial here in beautiful Port St Lucie, Florida, and welcome to another mortgage and home buying tip. If this is your first time here and you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel and ring that bell so you don't miss anything. Okay, Fed rate cut, mortgage rate forecast, all that other stuff. How does it affect you as a mortgage borrower? Oftentimes when the Fed meets and they cut rates, many times my borrowers who I've quoted rates to, they expect me to do this to them. But oftentimes, this is what really happens.
I'm not mad. I'm just disappointed.
Yeah, it can be disappointing because one has nothing to do with the other. Federal funds rate cuts have to do with short-term interest rates. What they did cut was a discount rate is what banks charge each other for overnight loans. And it's done by the Federal Reserve in order to stimulate economic activity, which is a short-term phenomenon. Interest rates are based off of long-term rates, and it's based off a market. They're traded on a market. Your buyers and sellers and traders and your pension plans and 401k plans that you belong to, that's all that millions of dollars of money is traded on the bond market. And that ebb and flow of money in the bond market is what changes. So your interest rates can change several times a day, whereas your Federal Reserve meets 8 times a year and it can affect rates either up or down. So that's generally the big difference. So one generally has nothing to do with the other. In fact, the other day when the Fed cut rates, mortgage interest rates went up. So rates that I quoted in the morning, by the afternoon were worse. And even though the federal funds rate went down by a quarter point. Generally, long story short, federal funds rate has nothing to do with long-term interest rates. Give me a call for your own personalized quote based on your own situation. And let's talk about also a mortgage rate forecast for the rest of 2019 going into 2020. Many of the sources that I subscribe to, like Barry Habib and MBS Highway, are an awesome source. Barry's a great guy. He anticipates the lowest interest rates we've ever seen. Those are his words, lowest interest rates we've ever seen. Based on we have a recession on the horizon. Many economists, either at the end of this year, 2020, 2021, they expect that to definitely happen. When a recession happens, generally interest rates will come down because money will flow into the bond market, called a flight to safety. And what Barry's saying is going to be some of the longest long-term interest rates we've ever seen. Whether that happens, again, you can't always predict it, but just based off of what our economic indicators show, that's what we anticipate for long-term interest rates. So again, if you want your own, definitely get a personalized rate quote, because ultimately your rate will determine on your FICO and loan program, etc. Those are rates in general, based on what the long-term bond market is showing. So again, if you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel and ring that bell so you don't miss anything. Thank you so much for watching, and I'll see you on the next one.